The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Hi folks, Basil Chapman sitting in for Larry Pesavento. Yes, this is in fact the Commodities Hour, and it's my pleasure to be here sitting in for Larry. And I use a methodology that I call the Chapman wave methodology. I identify the lowest, most obvious low bar, and from them you merely count each successively higher peak using uppercase letters. A, B, C, D, E, can even go to an F and a G. And when it gets to a D, that's where you got to be careful, or an E, that's where you got to be careful. If you're looking at the E-minis right now, up 1150 at 1643, sounds fantastic, but in fact it hasn't even yet hit the 1647 level, which is the 200, which is the 9-period black line, 9-period exponential moving average in the daily chart. So pulling back from 1705 to the 1624.75 level, yep, that's a huge move down, 80 points, and obviously any rebound can certainly go towards the 9 EMA at the 1647 level, probably even go a little higher into maybe tomorrow. We'll see what happens tomorrow. Is there nervousness because of the weekend and Monday being a holiday? Anything can happen in Europe, and then we get stuck on Tuesday, whatever the results are on Monday. Or is there a confidence now that nothing's going to be down for a little while, and we can quite easily see a more concerted bounce into midweek next week? So let's just discuss a couple of things. There is a divergence in the futures, in the E-mini S&P 500 September futures, with the stochastic. That's this green and red line here. I know that Larry doesn't use moving averages. Just let me get to this. That divergence is a positive divergence. It's saying that the price came down from 1631 down to 1624, while the stochastic was actually making a higher high, and there is a flattening finally in the MACD, this moving average. The green line is the fast period moving average. On the left here is the daily. On the right here is the 120-minute chart. This 120-minute chart shows some fascinating things. You see that line over there? Let me see what it looks like on Tiger TV. That's an orange line. I call it an orange line, goldy orange line. That line was just, that's the 200-period exponential moving average. It broke down back on the 14th of August in the 120-minute chart. It tried to break above it and failed back in the 25th, 26th, 27th area. Then it plunged, and now it's trying to go back again. I'm not sure this time that it's actually going to make it, but we'll see, one step at a time. So Adamant says, question in the general, why don't I use fib levels? You know, I use fib levels every once in a while. I'll just say I've got to grab the fib levels to confirm something. But I have so many indicators that work. I've got that Sears and Roebuck toolbox, which, you know, anybody who knows my work, you know that I'm very strict on the levels and how often they hit exactly. I just have to stay with that. I find that the Fibonacci numbers help me with direction, but I either don't have the patience to wait for the exact number, or if you do it enough times, you find that the exact number doesn't hit very often. But it's really close, and it's an amazing thing that someone hundreds and hundreds of years ago could have come up with this concept, Fibonacci concept. So I don't decry it. I think it's fantastic. Just in my work, I only use it. There's one particular instance that I use it for, and that's the extension. When you extend over 268%, that's where I use it, because the very next pullback after that is usually very serious. So, to me, this is a counter-trend rally, and it's going to fail soon, and we will be making lower lows. That's the way I'm looking at the market right now. So I just wanted to get that out the way. Let's just run numbers. This is now, the Dow is up 67 at 14,892. What I said to subscribers, the 14,890s is going to be really tough in the Dow to break. You have to break above it, and you've got to get right into the 14,920s and sustain that move for this to be a move that has the kind of power that you can close comfortably at the highs of the day. We'll see. The day's young. The S&P is a little stronger than the Dow. The S&P cash is up 10 at 1645. The Dow's up 65. The composite index is up 37 at 3630. You've got gold down 1340. Now, I'll look at the GC contract. Oh, no. I'm going to take our first caller. I don't want our first caller to go offline. I want it to be right here. I haven't spoken to him for a long time. Why, it's Ari in Arcadia. Ari, how are you?
I'm doing very well, Basil.
Good.
Want to wish you a Happy New Year.
Well, thank you very much. Same to you.
Thank you.
So you'd like to...
RGLD.
RGLD. So RGLD is Royal Gold Inc. It's a royalty company. It's a fascinating company because when the golds are doing really well, all they do is they sit there. I have this visualization that there are like 7 people or something. I don't know how many people. There are very few people, but there are a couple of guys in the office, and they're just ringing this cash register. In fact, they don't even know where to put all the money that they're making. When gold comes down, they're looking out the window to see who stole the cash register. And that's what happened. This stock went to peak E in the Chapman wave. You remember I was just talking about how the Chapman wave goes to at least a D if there's a buy signal going to a buy mode. But it can also go to an E and then fail. It's done that twice. It did in 2010, then rallied back again to the high of 100.71. And I think that was in October of 2012. Well, it had a little bit of a pullback. It pulled back to 38.63. Let me just type that in. 38.63 a couple of months ago. And now what are we looking at? We're looking at a single leg A to the upside. So the monthly chart says great action after a single leg down. You don't usually reverse, not this kind of move. You don't reverse in one single leg and then go all the way back to the top. Invariably, there's some kind of a test. Where the test will be depends a lot. It hit the 9-period moving average. It went over it in the monthly chart. That 9-period moving average is right at, as we speak, it's around about 61. And it's trading right now at 59.37. We'll see if this month closes above it. If it closes above it, that is a good sign. Single leg A up in the weekly chart, and it's gone without any peaks. This is just what I call a floating ladder. From the moment it went to the high of 46, round number high, on the 19th of the week of the 19th of July, the next week it gapped up. That's a floating ladder. That A goes to the next high, then the next, then the next, then the next. And this high is a very wide candle. It's like an engulfing candle, but I look at it a little differently. It's like a firecracker, actually. I have a candle that I call the Roman candle. This is not it. This is something different. This says that there's probably, at least for a week, there could be a trading band, and I'm going to draw it in, between the high and the low, right there, with major support at 55.46. RGLD is trading at 59.34, down 73 cents right now. I have it in peak C. I should put this in to make it clear. I'm calling it C/G rather than G/C in the daily chart, having gone to this high. I just want to see if there are any round numbers here. 67.25. So 67.25. What a nice move. 67.20. And I just have a suspicion, Ari, that you've been in it for a little while and you've got yourself a nice gain. Am I correct?
You're correct. I sold out.
Okay. So now what you've done is you've taken it and you probably got out at about the 65 area. And now you're sitting and now you're sitting back for a little while to see what happens, right? Is your intention to get back into the stock? Ari, did I lose you?
Yeah.
Oh.
Yes, it is. I was thinking left, right, left, right on the daily chart, and I was hoping maybe 49.
So let me just do a little work on this, okay? So A, B, C. Oh, that's I missed my letters there. You should know that after maybe at least at minimum 500,000 times of lettering my charts, you'd think that I'd know where the little letters are, right? I need to just check. This looks to me like it's a D to an 83, 80. Okay, so that goes to an E. This is going to be very interesting. A, B, C. Somehow it always works out. I don't know how it does. It's A, that is a B. Let me just double check. I don't want to do anything here that I would regret later. 20, yep, that is. So this goes again to a B, a C, a D, and an E. All right. Boy, this loves E's in the dailies and the weeklies, whatever it is. So now we've got a down arrow there, down arrow there, down arrow there. Aha. Okay. This is what I'm looking at on the 120-minute chart. The stochastic's at 9.10. I'm suspecting that it is within 2 to 3% of a reversal to the upside in the 120-minute chart. How long it takes, I'm not sure. Now what I'm doing is I'm going to see the gap in the 120-minute chart from 56.11, the low on at 11:30 in the morning Eastern Time on the 12th of October, and the high of 55 round number on the 9th of August. What I'm going to do, just as starters, is I'm going to draw what we call a left side, the Chapman wave left side, right side, price time match, and I'm first of all going to use a particular candle that I think is very important as an assessment. If that is too short, I will go to a longer time frame, but I like to go time frame by time frame. So there it is. Okay. This one is saying that by the 11:30 on the 30th, which will be tomorrow, there should be a test of 56.11 to 55. Somewhere in that area around 56, there should be a test, or lower, of the support line. That support line should in fact be red. That's the one way. Another way that I can do it is to extend it out a little bit, as if there's a little bit of a bounce and it takes more time. But now it's even more important that I choose another candle. And this candle is going to be right here. And this is going to be, for me, the most important thing. And I'll explain exactly what I'm looking at here and why I'm looking at it. So little lessons in the Chapman wave. Excuse me. Okay, we've got a break coming up. That'll give me just enough time to finish. Oh, I'm almost finished it. 52.73 is the 200-period exponential moving average. So I'll explain what I'm looking at as soon as we get back. Basil Chapman sitting in for Larry Pesavento. Dow's up 71, S&P's 9, up 960. And I'm on with Arian Arcadia looking at Royal Gold. And I'll be right back. And we'll talk about the metals. We'll talk about the currencies. We'll talk about the futures when I get back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Everyone, we are back, and let's see, the Dow's pulled back a little bit, and the S&P is still up pretty nicely at up 9.29 in the cash. So this is what I want you to do. We are on with Ari from Arcadia. We're looking at RGLD. One of the things that I'm looking at in RGLD is that the stochastic in the weekly chart is at 88%. The MACD is just beginning to expand. The histogram, if you're looking at my charts, you will see that the little green lines, it's a little light on the TV, but you see the red lines, that's a 0% line of the MACD. Once it crosses over and starts to form those green lines, that's positive. It also tells you the distance between, it's the 9-period moving average differential between the green line and the red line. So far, the technicals, the price has gone just a little bit more than I would have expected if I was just looking at the technicals, which is actually a lot better than if it's worse. And that's a very good positive. So now what I'm going to do is I'm going to say to you that the rectangle that I've set up on the weekly, if I want to be more thorough in my work, I would lower it to the 9-period moving average of 55.46 just to give it room. But I will not move it to the upside yet. Now, here's what's important about this particular thing. When you get a V-shaped pattern, and that's really important, coming off major lows, and this was certainly a major low, it is imperative. I like V-shaped patterns for one particular reason. It says when you get a cup formation, let me just go to the cup formation right here. That's still a V. Well, call it. This is more like a. I'm not going to find one right now. Of course, on the top of my head, I've got about 10 of them. But I don't want to change the chart. If this was taking more time to come down because it extended the price, the number of bars to the left, and it made the cup formation. I find that the cup formation, while it can be very powerful, is not as powerful as a V-shaped formation in a major sell-off. And one of the reasons is you want to tackle all the left side problems as quickly as possible. What's the problem? The problem is the huge gap down the week of the 12th of April at 69 round number open. It plunges down to 60.41. The RGLD goes to close at 60.47 cents, 6 cents off the low, and then gaps down the following week. Well, that gap has been filled, decisively filled, because there were two closes above the 9-period moving average, two closes above the gap low, and we don't know what's going to happen yet, but we filled, more than filled in, and there was an attempt to tackle the top of the bar, the 69 round number high this week. It went to 67.25. So to me, I'm putting this together and I'm saying Royal Gold is acting very well, because the weekly chart, even more than the daily chart, has given me all the confirmations that I like. Now there's something else I'll introduce, because you worked with the Chapman wave methodology for so long. There's a pattern I'm watching closely. It's called the Chapman wave squash. What is the squash? It's when the slow stochastic rallies really quickly from a low, together with a very big expansion in the beta between the fast-moving average and the slow-moving average of the MACD. And together they are so close, and yet this is still only, in this case, leg A. So I suspect this is not going to be a single leg A up failure, that we'll at least get to a B. At that point, if we've only used time and leg B, and I suspect this is what might happen, leg B, this is for RLG, has not taken out 71.46. That's the high of the week of the 29th of March, but instead just gone sideways. You can see a cup formation as some kind of a V-shaped cup and handle formation forms, and then it'll go slightly higher, and then it's going to give back a huge chunk. And that says, under those circumstances, pushing above this week's high of 67.25, it's imperative that there's another rally, and almost like another buy mode that accelerates leg B very strongly, and it preferably doesn't even take the whole of next week to make 67.26 to extend leg A, but it immediately starts next week and it just pushes right through into the 72s. If it does that, the monthly chart is going to improve tremendously. So here's my recommendation. I would not want to lose a chance of getting into Royal Gold. So I'm going to suggest, I know the way that you trade, you're very patient. You don't like to be too early, you don't like to be too late, but you don't mind being just a tad early. I'm going to suggest you take a little bit of position right now, Ari, at 59.69, knowing that there's a chance that it's going to fill the gap between 56 and 55 sometime in the next week. There's a good chance, but at least you're in it. So I hope that helps you.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hi, everyone. Basil Chapman sitting in for Larry Pesavento. Let's do this. I'm going to run through the currencies. I'm going to run through the dollar. I'm running through a bunch of stuff because it's really important. First of all, the news reports, as we've learned from most administrations, things that come out initially are usually slanted towards the bias of the particular administration. You'd expect that. That's just the way it is. That's the thinking anyway. So I suspect that you've got to be really careful going in here. That's the reason why I don't want to lose the gold trade. So keep your gold and keep your core gold. And I would not, as I said to Ari, start a position here, at least a small position in Royal Gold, and then add to it on the drop. I'd rather be in the gold for the chance that this is gold is a currency of fear, and that's all. So let's just leave it at that. Now let's do this. There was a question if I look at some gold stocks. Yeah, let's do first of all the dollar, DXY, strong leg B coming off the bottom. Now this is that cup formation in a very orderly down move, but everything about the chart says that unless the dollar is able to spike and hold, this is a very nice move, and I've been anticipating some kind of move to the upside. I spoke about it the other day with the divergence between trough E and trough F in the daily chart lower in the dollar index, while you're looking at the stochastic and the MACD, just like the 120-minute chart that I showed earlier of the E-mini this morning, was moving up, but the price wasn't. When it does it has an explosive move to the upside. So the dollar's up 0.73%. That's a big move for the dollar. Now, within the context of the monthly chart, it's in a trading range, and that's what I've been talking about for a while. This trading range says that it needs to decisively, and I prefer it to be in leg B, not C, but B, continuation to close above 82.49, the high of the 2nd of August. If it does that, immediately you got this whole area that's skinny, that Roman candle wick, all the way back to the 10th of July, a low of 83.47 and a high of 84.73. That would become a target. I don't like to go that far. I like to go step by step. So first the 82.49 area. Let's go to Frank in Louisiana. Hi, Frank. How are you?
So I'm enjoying your show, and you made some great calls. Is it too late to go short, and what fund would you recommend at this point to get in if you are?
You know what I'm going to recommend? I'm going to recommend to be as conservative as possible. There's an ETF, it's the SPY ETF, the 100% short. It's the SH. It's the ProShares Trust Short S&P. Now, I'm just going to notate this. It's A, B, C, D, and it's gone to an E. This E should theoretically pull back quite sharply. It hasn't so far, but I'm of the opinion, and of course, this is just an opinion, I'm of the opinion that what we're looking at this particular point, now this could be an E/B, and E/A. I'm going to put the A in only because it doesn't happen often, but the power of this move says that a number of things need to happen, and I'm looking at the 100% short S&P ProShares Trust short, and this is what I'd be looking at. I don't know if you have any long positions, or let's just say you have a portfolio, it's a work portfolio, a care plan, or whatever it is, and you're basically long. As a protection, and this is what I recommend for anyone who's looking at something, just to say, you know what, I need some protection in case I don't want to be solely long if the market is going to be turning down. It has already pulled back 5, 6, 7%, depends which index. The Qs are much less. But if it was to garner strength to the downside, I just need to protect. You could use either the DOG, which is the 100% long, the Dow, the dog, or the S&H, and at least says, you know what, it isn't quite point for point. For instance, this is now down 0.54%, and the S&P's up 0.52%. It's working quite well today. There are other days where the SPY is up a much better percentage than the SH is down, correlating to that mirror image. So this is just, I'm going to throw that out right now. So let me do this. I'm going to ask you, is this a position that you want to play? Not play, as a position, to put on a position?
I have a small cap short position, but I'm really not short, the Dow or S&P, which would be the large caps. Am I okay just sticking with the short TZA small cap?
Well, you see, now what you are short is you short what has been one of the weaker indexes on a daily basis. But if you look at it on a weekly basis, it actually is up in the higher level, and it hasn't really. We'll see by tomorrow at 4 o'clock. But it's only nicked the 9-period moving average twice, and so far the week hasn't closed, so this might not close. It would be only one time since it broke out above it back in the first week of July. The MACD is turning down, the stochastic's turning down. Everything about it says it should be going lower, and it's leg E in the monthly chart. So, ironically enough, from the top of 105.65, is that correct? 105.63 on the 5th. It's gone down to 100.50, so that's 5. It's 5%. So the Dow has actually gone down 7%, almost 8%. So,
okay, sticking with it.
So I'm saying to you, I think staying with it right now is fine. Now, this is what I'm going to suggest to you. If I'm correct, and I always have to say if I'm correct because we're human beings, we can only do what we can do. And I'm looking at time And I think at this point I have to consider that a chunk of the decline has been done in the Dow. Depending on where this rally goes, will there be another equal amount to the downside, or is it going to slow down and just retest the lows? That's something I don't know, because I have to go week by week. I suspect we're looking at time, and a chunk of the price has been done. I might be wrong, and the price could accelerate if things get really out of hand. Oil goes high and all that stuff. So this is what I'm going to suggest to you. As part of you got to do in terms of your finances, because everyone has limited finances. You might say, just to have a position in the SH 100%, I've got a 300%. Don't I want to go to something like the SDS, which is 200%? It's the same chart pattern, A, B, C, D, E. Same chart pattern. It doesn't matter to me, because you could even double up on the one. But you choose whatever you want. But this is what I'm going to suggest. That the weekly chart is only in leg A in the inverse S&P ETFs. That's both in the SH and the SDS. So it doesn't really matter how much you want to put in. That's your own business. My suggestion is to start a position now. But it's not a full position. You're not going whole hog into this thing. It's just saying, you know what? You're only off from the low of, let's go to, I don't know if you choose the SDS because you've done that before, or the SH. I bet you've never traded the SH, right?
No.
Okay. So let's just say you go to the SDS because you could get even a half position. It's the same sort of thing. The SDS made a low, an all-time low of 35.85 on the week of the 2nd of August. But wait a minute. It's only at 39.33. 35, let me just write that down. 35.85. Let me just write that down. That's not even 35.85. That's not even 9% off the low, all-time low. So if correct, there's a chance that the SDS will climb. And if it holds support in the 36.84 area, that's 2 points lower, let's say. I think a 2-point stop in something like this as a starter position, I don't think I think that's reasonable. My suggestion is to start a position there, and if it takes out the high of 39.33, which is the high of 2 days ago, you're already in the position, number one. Number two, you can now start thinking that on the next move up, you'll be prepared that if it pulls back and holds your initial position, entry position, and then starts yet another leg to the upside in the daily chart, that you can actually start to add. In other words, I would rather have you trade the trend if we can have a little bit more time, and if the SDS is able to get to the 40.38, if the SDS gets to 40.38, my suspicion is we will be testing the 43.32 high of the week of the 24th of June of this year. So that's the way I would do it, and you start off and you have a 2-point stop. Now, the market could still rally into tomorrow and even into Tuesday and Wednesday, but this is a starter position, and my suspicion is that if you get it, that 2-point stop will probably hold. I once again, no promises, but that's what I'm thinking. So I hope that helps you.
Yeah, it does. I have a last question. Will the gap on the NASDAQ and the S&P from the few days ago be filled, or do you think it's going to continue down?
There's a really good chance that if the volatility index goes back to 15.90, it's at 16.44, that it will be filled. But if the volatility index, and this is my suspicion, that the volatility index, as I told my subscribers this morning, I think it's starting to build momentum. It was torque to get off the ground. It's momentum that's going to sustain it. So I think that the gap can only get filled if the VIX in the next 2 days just suddenly slides to the 15, it's at 1644, to the 1590s, 1560s. Absolutely, it will get filled. But that's the risk that we have right now. My thinking is that the trend has changed to down, and that what we're really looking at is that these are rally failure modes.
I would agree.
So I hope that helps you,
It
Frank.
does very much. I appreciate it, and I'm enjoying your show.
Thank you very much for calling. I always appreciate calls, and I always appreciate a call from you. Thank you, Frank. So let's go to our next caller. We've got Brent in Martinez. Hi, Brent. How are you?
I'm doing very well, Basil. How about you?
Very well, thank you.
I wanted to revisit UNG. We haven't talked for a couple of weeks, and just get your assessment of what's happened in that time period, and then get your opinion going forward.
Okay, so this is really important. You know what's important about this is that I don't trade natural gas, but I know that Daryl Martin does. He does it using his methodology, his diagnostic trading methodology, and he'll be on in the next show. And I just wanted to mention this because it's a great lead-in for the next hour, because we've got this competition coming up, the virtual trading competition. Go to the front page of TFNN. It'll just knock your socks off. $300 to $1,000. Just a lot of money given away. $10,000 in cash prizes using the Nadex system. It's basically a practice session for you where you can win money, you can learn, and then maybe you'll even start trading the program. Use that. It's just a fabulous methodology. It's a fabulous way of negotiating your risk. It's really, and listen to Daryl, because he'll be going into it very much more. So let's go to UNG. The reason why I brought that up is because I know that at other times I've heard Daryl have some fabulous trades on natural gas. Now let's look at this. The candle that's forming in the weekly chart of UNG, which is trading at 18.70. This is the United States Natural Gas Fund. And actually, I never liked it for a long time, but now it is so close to the actual chart formation. This is leg E in the UNG. It happens to be leg D in the continuous contract, but that's because there were almost two parallel highs, so it's very close. But the patterns look good. The stochastic is good. The MACD is good. You still have the position, right?
Yes, I do, and I would like to stay in it. I just need your opinion if I should. I want to try to stay with my core position.
So now you remember when I spoke to you about how if it walks the 9-period moving average, that black line that I'm showing in the daily chart, if it was able to break and hold above the 9-period moving average in the weekly, the black line there, and how the monthly is forming a pattern which I've spent years talking about. It's the lowercase h pattern, which could become not just positive, but it could be an incredibly bullish breakout pattern if certain things happen. Well, I'm going to change the color here. Let's see what I can use. I'm going to use this blue color, all right? I'm going to make it very thick. No, let me use purple and make it very thick. Wait. I think you're going to get, when you see this, you're going to get a good surprise. I spoke about this in terms of what it require if it was to break out. I hope I'm able to make this thick. Wait. Nice and thick. There you go. Let's do this side here, color maroon, and make the weight nice and thick. Look at this. You see that? Oh, I made it even thicker than I intended. You see this pattern? I don't know if you're looking at the monthly chart of the, if you're looking at Tiger TV, but if natural gas is trading at 18.69, the UNG, if it's able to get into the 19.80 level, that's going to be a positive. I'll talk a little bit more about it as soon as we get back. We'll be back with Brent looking at UNG as soon as this break is finished. Don't forget, these breaks are really important to TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Hi, everyone. Basil Chapman. Usually I do the Tiger Technicians Hour Monday through Friday on market days, 11 o'clock till noon. Larry comes in on Monday, Wednesday, and Thursday, so I'm helping out Larry this afternoon. And my service is the opening call, and all the technicals that I'm talking about here, all the positions are gone into great detail, why, what we're looking for, etc. Now, I've got this chart up here, and it even says Brent entries point. So you got a great entry. Brent, this is what I'm going to suggest. That monthly chart, step by step, is starting to improve. But the evidence has to be that UNG is going, the candle that's going to close now is going to be a long-legged doji. It means that if there's a dip, it should come right back to the 18.72 area. If there's a rally, it should retest the 1872 area. Here's my suggestion. You've got your core. I would add a position if at any point, I don't know if it's going to happen, but by Tuesday afternoon or Wednesday morning, if there's a dip towards it's at 18.73 now. If it takes out today's low of 1844, then there's a good chance it'll also take out 1831, the low of the 27th. I would establish a trading position somewhere between 1821 and 1802, and I'm going to write that down so that I remember that as well. UNG 1821 to 1802, big question mark. That's where I would start to consider adding another position. Now, as far as the core position is concerned, step by step we're going through it. The weekly chart has gone down so sharply to trough D. normally you'd get some kind of a retracement, maybe fill a little bit of a gap under 18. So the stop that I would use, if you got in at that entry, the second position, I'd have a tighter stop. I'd say 1785, somewhere around there. I'd put a stop in on a second position. But the core position, I'm hoping that you're going to be able to hold that. Call me up in months and months' time and say, wow, you remember when I got in at the lows at 17 and now look at it, it's at 27 or something like that. There's that. I don't normally say this. I'm very conservative when I look at this, but it has a potential in the monthly chart that if over a period of 2 to 3 months, it just steadily climbs into the 1980 20.50 area, then the 22.30 to maybe 23.30 area. Then if it tackles and breaks above 24, the round number high that was made in May of this year, that's new territory altogether, and it can go step by step after that. What it'll do then is it's turned the base that's formed here into a long-term base. So I hope that helps you.
It does. I just wanted to quickly let you know I really enjoy the opening call. I've only had it for a couple of months, but it's very informative, and I look forward to seeing it every morning. So.
Oh, I appreciate that. Thank you very much. Thank you so much for subscribing.
Thank you very much, Basil.
Thank you, and have a great afternoon, and we'll speak to you soon. We'll find out what that UNG is doing. That was Brent in Martinez, California. Thank you, Brent. So now let's just do this. I can't even remember if I did. The EUR-USD, peak E, Chapel Wave peak E at 1.34 back on August the 20th. Now it's in leg B down. If it takes out the low of the 15th, 1.320, it is going down. The 200-period moving average is 1.31. That will allow the dollar to move higher. If the dollar moves higher, there could, in fact, be market pressure. Let's look at bonds. I was asked if I would look at bonds. I'll just look at the U if they don't mind. Now I'm going to go to the continuous contract because the chart pattern is the same. The continuous contract is what I'm looking at. Why? Because, I haven't got time. I'll do it tomorrow morning. But bonds are in the inside track buy zone. If bonds at any point break under 126, that's a continuous contract. That's a real problem. They've got to bounce right here, and they've got to bounce. Bonds have to get to 134 to show that they have upside pressure to come. Hey, stay tuned for Daryl Martin, and don't forget the competition coming up on TFNN. I'm sure Daryl will go into it in great detail. Thanks for being here. Have a great day.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi. I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.